Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at, as per the title of this video, why this is the most dangerous part of the 4-year cycle and why we need to pay attention or lose our money. So this video is all about a message to people who are waiting for lower Bitcoin prices. I'm also going to be having a look at the 60-day cycle for Bitcoin and having a look at exactly where the possibilities and probabilities are for Bitcoin to turn around from this current correction. And if I've got time, I'll have a look at what's exactly happening in the background with all the wider markets. So if that sounds interesting, then without further ado, you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. So the question is, why are we in the most dangerous part or phase of the 4-year cycle? And what the current correction has done is to make people wait for even lower prices before they make the plunge to get on board the Bitcoin train. So what we're going to do is we're going to look at exactly what's happened in the last 3 cycles after the halving and work out the current correction, whether we've come to the end of that or we have a little bit more to go yet. So I'm going to start off on the first cycle here just to have a look at the facts in the charts and what they're telling us and build up a picture and develop a narrative of what may happen in the current price action that we've got with Bitcoin. So I'm going to go on the weekly chart. I'm going to have a look at exactly what happened after each of these halvings, these red lines here, in terms of the corrections we had. The one thing you will notice is that once we've had that correction, you'll realize that the price of Bitcoin has never gone back to below that price ever again. So let's start off with the first cycle here. So what I'm going to do is take the price corrections from the week of the close of each candle and give you some sort of an idea of what happens exactly after the halving as we've just had a few weeks ago. So you can see this candle closed at this point and we came down as low as this point here. So that was a 20% correction. And what I'm going to do is I'm going to put a ray at the bottom of that correction there to show you something incredibly interesting. So we'll move on to the second cycle and we can see at the top of this candle where it closed on the week of the halving, we had another correction down to this level here. And that was a 26% correction. And I'll put a ray at the bottom of that correction there. And finally, the third correction, the top of this green candle, the close on the week of the halving, came all the way down to the bottom of that red candle here, and that was a 10% correction, and we can put a ray at the bottom of that. So moving on to the current cycle, so far we've had a 20% correction in cycle 1, 26% correction in cycle 2, and 10% correction in cycle 3. We are currently on cycle 4, and so far this is the candle that closed on the week of the halving, the bottom of which was the close. Since then, we've been down to 56,000. So that tells us it's around about 12% we've been down so far. So if you look at the range of the previous 3 cycles, the range has been between 10 and 26%. So just based on those 3 data points, this could quite easily have been the bottom. However, if we have a correction towards the 26%, as I'm going to show you a little bit later on, why lower prices are still within the realms of Bitcoin achieving those lower prices. So I'm going to put a ray at the bottom of this candle so far at 56,000. So when I zoom out, you'll see why I'm putting these rays here. So these are the white rays I've put on the chart, and I've taken you to the monthly time frame just so we can zoom out and have a look at the bigger picture. So the first ray there tells you that at no point did the price of Bitcoin ever come back down to that price. In the second cycle, at that rate, you can see nothing has come back to that price. Third cycle, nothing has come back to that price. And the reason for showing you this is that if you look at the current price and where the current ray is, this white line there, and so far that's at 56,000, but obviously we do have the possibility, as I'll show you later on, of why 50 and 52,000 is still on the table despite the current rally that we're having with Bitcoin. And as I'm speaking, it's at 62,800. And one of the main reasons why I'm showing you with these white rays is that many people out there are still talking about a 40,000 Bitcoin or 30,000 or even lower, and people thinking that we've now topped out here and that we're now going to be in a bear market. So what this is really saying, if you look at the historical perspective of what's happened, that just after the halving, we do have a correction at each of those halvings. And those corrections vary from 10% to 26%. And that correction so far in 3 cycles have been the last flush out before the big parabolic move to the upside. And at no point does the Bitcoin price ever come back down once we start that parabolic move. So for people waiting for prices below 50,000, let's say, this is a very powerful message that with a higher probability, you're going to miss the Bitcoin train. So if we have bottomed out at 56, then we're never going to see that price ever again. And there's one pattern I want you to be actually aware of here. If I take you to the weekly chart, and if I show you the psychology of how this market works from the start here of the first cycle, so once Bitcoin's bottomed out here, after the halving, look what happens. Each of these candles becomes a higher low and a higher high. And because people are waiting for lower prices here, maybe down to this support line here, but it doesn't give you that. So people wait for the next candle, and the next candle is slightly higher than the previous one. So they wait for the next one, hoping and praying it'll come back down. But instead, it gives you a higher low and a higher high. And you see the price moving away from you, and you're waiting for lower prices. And then you get this red candle here, and you have a little bit of hope that maybe this time it'll turn around. But what happens? The next candle creates another higher low and another higher high. And this basically continues until you get to a point where you get exhausted waiting, and then you enter at around about this point here. And some don't even enter because they get angry and frustrated at the market. And always remember, the markets are neutral. There's no point in getting angry with the market. And the reason why I'm pointing this out is because this is the psychology of the market that repeats over and over again. And this is why we are in the most dangerous phase of the 4-year cycle, where people have seen these corrections along the way, and they're expecting another big one here. But after the halving, the whole of the 4-year cycle starts to take a completely different pattern from there onwards, and we need to just be aware of that. And this is the second cycle. Look what happened. Once it bottomed out, rising demand here, higher lows and higher highs. This is how the market really leaves you behind, where you're hoping on every candle that it'll come back down, but it doesn't come back down. And even when it does, that's your big hope. And you think it's going to come back down to these levels or these, oh yes, I'll definitely buy now at this level. Oh, I'll definitely buy if it comes back to this level. And then what happens? Another green candle and another rising demand line here. And again, it leaves you behind. And the third cycle here, once we had that correction, and once again, we get higher lows and higher highs into here. The market gave a chance for those who wanted to get on board. But at this point, at the bottom of this, people are expecting it to come back down. So they don't get on board. And then once again, you get your higher lows and higher highs and leaves you behind. So this is what you can expect. This is what's happened in the last 3 cycles. So I just want people to be aware. If you are on the sidelines waiting to get on board, please take this into account. It's not the types of analysis people do. And I'm just trying to bring this to your attention. So in this current cycle, what we can expect is, if this is indeed the bottom at 56,000, then what you're going to get is candles which are going to be higher lows and higher highs, and they're just going to leave you behind. And you might get one candle that's going to actually give you some hope, but you won't get on board because you'll expect it to come back down to lower levels. And then it'll start that same trend one more time, and we'll get the higher highs and the higher lows. And it may be anywhere in this region that you're going to get on board. And what happens is that when the market tops out, it'll flush people out, and anybody who got on board here will be then either losing money or at parity at best. So you have to understand how this market works. The question I'm going to now tackle is that, have we actually bottomed out at 56,000? This is what everybody wants to know. Or are we going to go lower down to the 52,000? And for that, I'm going to look at the 60-day cycle to give you some really good clues as to what can possibly happen with probabilities. The first thing I want you to notice is that these red lines are the ends of the 60-day cycles in the past. And one thing you'll notice is that as we go into the last part of the 60-day cycle, you get some kind of a flush out here and here and here. And the last one, as we saw, back there in March. So what we can expect into this 60-day cycle, which I've got marked as 19th of May. So obviously with the flexibility of the cycles we know is around about 10 or 15 days either way. So what we can do is we may well have flushed out here at this point. We don't know yet. And this may well have been the flush out, but that might be too early in the cycle. What we have to look at is the possibility of another flush out into this 60-day cycle. Is it going to stop at this point, or is it going to go all the way down to the 50-52? First of all, we are very close to the end of this cycle now. So we're getting deeper into the 60-day cycle low, and we can expect one big flush out. And there are really two possibilities here, and one has a greater probability of playing out than the other. So the first probability is for a flush out back to testing these levels here at around about 57,000. So as we can see, we're coming back up to this trend line, which I showed you last week, and we're coming back up to retest this trend line here. And so far we've got rejected twice there, third time, and now we're coming up to it the fourth time. If we can push through here, then this is the level we need to get back above now at 65. But ultimately we need to get above the 67 here before taking out the targets down here off the table. So the first probability is for a flush out into this 55, 56, 57 zone here, and then a big bounce into the new cycle. And the second probability is for this to go more sideways and then have a final flush out into this zone here where all the price action was at this point. And the market has a habit of really punishing the weak hands. And this is one way of flushing out all the weak hands at this point before moving very strongly into a big bounce for the new cycle. So these are the two probabilities I see at the moment. It doesn't have to come to these two possibilities. If the price does do this into the 60-day cycle and has a big move above the 67 at this point, this will be a sign that this wants to go much, much higher. So just like the gold technical analysis I did before the gold price moved very, very highly, we saw a sign somewhere down there which was telling us a prelude to what may happen here. So if it actually happens like this and it doesn't even come back down to the 56, 57, then that will be a very sure sign that with a higher probability we're going to be moving above the 74. That is something we need to take into account, that while these are the two main probabilities, the lower probability of it doing this and then having a big shoot up above the 67, it is on the table, and it will be a very strong sign that we are wanting to go much higher than the 74 very, very shortly afterwards. And as we've seen after the halving, this is what it does anyway. So that will really confirm that narrative. So the case for 56, 57 is that we are deep into the 60-day cycle here, and it seems reasonable to have a flush out at the 56, 57. And as I mentioned earlier, so far we've had a 12% correction, which is well within the realms of what's happened in the past 3 cycles after the halving. So this is definitely on the table. And I also want to show you something, that since we bottomed out here at 15,400, the only corrections we've had are these ones here. So these are the corrections we've had since then, and that has been a 22% correction, a 20% correction, another 22% correction, and a 21% correction. So far we have not yet had anything above the 23% correction. So this current correction that we've had since 73,000 down to the 56 has been another 23% correction. So that would make sense. So if the levels of correction since we bottomed out at 15.4 is to go by, then it looks with a high probability that 56 is the actual last correction we're going to have. That may well provide the double bottom for us to move up from. So that's the case for the 56, 57,000. However, if you look in the past cycles, we have had corrections after the halving, as you can see here, of around 75%, but this is a bit of an anomaly. It's the first cycle, so you can see there's much more volatility there. But coming back to the recent 2 cycles, you can see after the halving, from this point here down to there, there's a 39-40% correction, then another one here at 36%, another one here at 40%, etc. Even after the last halving, we saw here there was a 25% correction, and this point here from the 64,000 down to 29,000, that was a 55% correction. So in the middle of the bull market, we still get bigger corrections, and we haven't had one of those. So the question is, are we due one now, despite the fact that we've only had 20 to 23% correction so far? So if we were to follow the previous 3 cycles, we may well be due a 30% correction, which means that 52,000 down here is on the table, because if we measure from the 73,000 up here down to this low of 50,000, that would give a 31% correction. So that would be well within the realm of what's happened in the previous 3 cycles. But because classical charting takes more of a weight, a higher weight of recent trends, i.e. the fact that the current bull market has only had between 20 and 23% since we bottomed out at 15.4. So based on that, if you had to do a balance of probabilities of the most likely price, where the price for Bitcoin is going to bounce from, I would suggest 56, 57 is the lowest point we're going to get to with a higher probability. And as I mentioned in the last video, because we're getting deeper into the cycle, it looks to me to be a 60-40 in favor of a 56-57 bottom rather than a 50-52 bottom here. That was definitely on the table when we came down to these levels, because we still had quite a lot of the 60-day cycle to go. But coming so close to the end of that cycle, a flush down to 56 would frighten everybody off. Get the weekends out here before a big move to the upside. So just looking at the overview, this is the reason why this is the most dangerous phase of the 4-year cycle. This is where you have the greatest chance of being left behind. Everybody's expecting a deeper correction. And as we've seen from the previous cycles, what we have after the halvings is a rising trend line of higher highs and higher lows. And that is designed to leave those behind who are waiting for lower prices. And this looks to me as though this is what's going to happen. So what is the strategy that I would be following based on the information I've just presented to you in the charts here? So obviously I can't speak for people waiting for that pullback. Everybody has a different mindset, everybody has a different financial situation, and everybody has a different risk reward tolerance. So while I can't speak for anyone else, I can only give you what my mindset says and share with you my thoughts. So if I had $1,000 to invest now in Bitcoin, then at this point where we are currently, I can't say with 100% whether this is going to come down or whether this is going to go up. But what I do know is, as long as you've got the narrative that this market is going to have a parabolic move to the upside, if you believe that that is going to be the case and that we're still in this bull market, then my experience of the markets tells me that I should just invest wherever it is currently. Because even if I have to ride it down to 56,000 or 50,000 down here, because my narrative is that we're going to be moving in this direction, sooner or later I'm going to come back to that price and make a profit from 61,400, the current price, and I can lock that price in. However, and the reason why at this point in the cycle I wouldn't be waiting for lower prices is that if the market does not want to give you a lower price and the price moves up to, let's say, 65, 67,000, or even to 69,000, then I'm going to have to buy back at a higher price. So if I want to have exposure from the current price, I have to allow for the possibility that I may have to ride it down to the 50,000 before I get the big parabolic move here. So those are the considerations, is that from the current price, if I want to lock that in, then I have to accept that there is an exposure to the downside. But if I want to gamble for lower prices, and it doesn't work out, then I have to know that I'm going to have to buy back at a higher price. But if you have a 6 to 12 month view, then you wouldn't take that gamble of a lower price. And let's say the price for Bitcoin gets to 200,000 around here. It doesn't really matter whether you got in at 61,400 or 56,000 down here. The whole idea is to really capture this big move here. This parabolic move is what you really want to capture. And messing around at this point where you know quite clearly from what I've just shown you from the charts, that sooner or later the market will start doing higher highs and higher lows, and it's going to leave you behind, and you may not even get on board at the 69, 70,000, because you'll forever be hoping for the price to come lower, but it doesn't give you that after the halving. So that's my strategy thoughts here. Okay, quick look at the dollar. What we've got here on the weekly chart is an evening star pattern. You've got a green candle on the left-hand side, an indecision hangman type candle in the middle, and a big red Marubozu candle on the right-hand side, which is an outside bar engulfing bearish candle. And as I mentioned in the last few weeks, it looks to me as though the dollar has now topped out and is moving to the downside. That should allow for the markets to go higher. And as you can see with the SPX, as the dollar's been coming down, this has just been having another rally into the recent high here. So we've got an indecision candle. It now has to make up its mind whether it wants to break to the higher side. And the beauty about this so far is that we're going into the midpoint of the cycle here, the 60-day cycle for the SPX. So you can expect maybe a rejection at this price here, maybe go up to that point, come back, reject into the 60-day cycle, midpoint here, and then make a higher high, and then go towards much higher levels here. So this is what I would expect the SPX to do, as long as the dollar keeps coming down. Moving on to the gold chart here, As we've been mentioning, this gravestone doji candle has really been playing out. It's caused a bearish move to the downside, and it looks with a higher probability that somewhere along the line in the next few weeks it's going to come back and hit the 61.8 at 2240 before bounces back up again into the bull market for the next 6 to 12 months. And silver seems to have played out to our narrative here. We've been following it all along here, saying that 30 is going to be a good zone for it to get rejected and to come back down to the 26. So in the last few videos, we've been mentioning that once it hits 30, that 26 is a natural place to bounce from. And this is exactly what's happening here with silver. We've seen the bounce at the 26, and we're now going into that, retesting that 30 zone one more time. The likelihood is we're going to get rejected here, but another sideways consolidation, maybe another correction before we move to the higher side. And in the wider news, we've got here Grayscale Bitcoin ETF has nullified $66.9 million in inflows in 2 days. And we can see what's happened here. If we go down to this table, that Grayscale, which has been bleeding the Bitcoins from its exchange ever since the 11th of January when the ETFs got approved, it's always been in the red. And then, as I showed you in last week's video, what we got was for the first time an inflow of 63 million, followed by 3.9 million. But since then, that 63 million has actually left the exchange one more time. And IBIT, the BlackRock ETF, which was actually absorbing a lot of the losses from the Grayscale, it went from a period of large inflows to a period where it had nothing going through at all. There was nothing coming in. And then we had a 36.9 million outflow. But in the last few days, from the 3rd of May here, we started getting more inflows again. And the last one being the 14.2 million on the 9th of May. So it looks to me as though, because of the halving, people are just waiting to see how the market pans out. Once the price for Bitcoin starts moving up, people will be encouraged to move back in to the ETFs, and you'll see these figures of 14, 15 and 16 million starting to rise back into the inflows for most of these ETFs here. Okay, just a final note on the Bitcoin miners. We have a private member section here which covers the Bitcoin miners, and I know one or two of you have had some difficulty trying to get in to become a member. I'm not sure what the reason is, and one or two of you have mentioned that this button isn't working. I'm not quite sure why. I've tried it and it works, but if this doesn't work, but if you look below in the description box here, there's another Bitcoin miners membership join link. If you click the red button here, it should take you to this box, and the price should be £12.99 per month. If the price is different to this, that means you're probably going through Apple, who put their own fees on there, and I have nothing to do with Apple. So please don't go through Apple to join, because they will put another charge on that fee. So for the price of a coffee per week, you should be able to become a member. And what we do is we do 2 videos per week. And this week I may start doing the members videos from tomorrow, i.e. Tuesday and Friday, instead of the Wednesday and Friday, and see how that goes. And as you can see with Marathon Digital Holdings, one of the major Bitcoin miners, just after the halving, they also follow Bitcoin, but in a much more volatile way. And what we've got already starting is higher lows and higher highs already starting after the halving with the Bitcoin miners. And in the next members video, I'm going to be looking at the miners who are going to be the fastest horses between now and the end of the bull market. So when we get to the end of the bull market, I'm going to be looking at 5 or 6 Bitcoin miners and their performances. And I'm going to give you the 2 fastest horses which I think are going to be doing the best over the next 6 to 12 months. And there is one Bitcoin miner which seems to have been undervalued and under the radar, and I'm going to do a special feature on that miner in the next video. And if you think that's worth more than 1 coffee per week, then join us with the Bitcoin miners. We have a thriving community of like-minded people with a view to capturing this big move here in the next 6 to 12 months. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.